we don't see anything else happening than an accident, a crash. There is something that's gonna go wrong if this expectation gap is not well understood.
So Babak, Natixis Global Asset Management surveyed 8,300 investors around the world, 400 of which were from Switzerland. What was the purpose of this survey?
So the why is the most important question. Why do we spend the money, and why we decided to spend the time to realize those surveys? Well, we think that the market and the investment in general is just like you and or me. There is a psychology, there is a mind, there is a mindset. The market adapts. We know that the error of the past is not going to necessarily be the error of tomorrow. And our goal is really to understand as deeply as we can, to take the pulse of this market, so that overall we can make sure that the investment experience is going to be better for everybody, for all the actors, for asset managers like us, but also for the investors. We want to match on one side the solutions we provide, and also the tolerance, the confidence of the client on the other side. If you understand this psychology, I think we maximize our chance. If, for example, I like to run. If you run and you understand how you have a shot of endorphin when you after running, you understand that it creates a virtuous cycle. You don't have this pain, and when you understand this chemical effect, you know that it's going to be positive for your body, and you're going to continue to do it. It's the same that we try to do with those surveys. If you look on the next slide, you can see that our findings are different, and we see a lot of positive things year after year, because we do the surveys for many years now. In 2013, when we asked the questions, do you individuals have a clear financial goal? We realized that only 40% answered that they have this clear financial goal. For us, it was much lower than what we expected. But after years of education, after years of services we propose, but many others also propose, we realized that this trend now is getting much better. Now we raised to over 60% of individual people that have a clear financial goal. So those are the positive things that we can see year over year through those surveys.
So from the findings, what was the most significant part of information?
So we have, I think, three main findings that we follow regularly, and some are new, but three main that we follow regularly. The first one is the expectation gaps between what individuals want, what they want to achieve as an investment, annual return, what they need to achieve, and what they can realistically get. We can see on this chart that globally, an individual, if you ask him what is your expected return, annual return above inflation, he's going to answer to you 9.9%. And if you ask that to a Swiss investor, they're going to answer 8.7%. So globally, Swiss investors are maybe more cautious, and they have a better sense of what they can expect, but it's still very, very high. Moreover, the trend is increasing. Last year, we jumped in Switzerland from 7.9 to this year 8.7%. So it means, in a way, that investors, they want to drive faster the car. They want to drive faster a car, but on the other hand, the state of the street and the state of the road is getting worse and worse. The second finding that we get from this survey is the gap between what the individual investor is expecting and also what a professional investor, a financial advisor, or in French a CGPI or a Swiss independent asset manager, he's expecting from the market. So we have our same 8.7% from Swiss individual investors. And on the other side, the professional investors, he sees that a decent expected return could be more towards 5.9%. So there is 48% gap between those two numbers. And this gap is very different from a market to another one. The Swiss investors, among I would say the ones that have the lower gap expectation. So they are below 50%. Those are the 48% that is below 50%. You have with the Swiss investors, you have also the French investors, you have also the US investors that are among this group. And then you have a second group, which is between 50% and 100%. And here you have the Spanish investors, you have the investors from Singapore. And beyond that, you have the investors where this gap is over 100%. And here you have the Colombian investors, but you have also the UK and the Canada, which is part of this group. The larger this gap, the larger you can have frustration between what a financial advisor is going to achieve as a result and what on the other side an individual investor will expect from this financial advisor. So the third finding that we saw, and this is a very positive one, is the increasing trend and interest for ESG investment or socially responsible investments. We saw that in Switzerland, if you ask the question, you have 82% of Swiss investors that want their investment to reflect their value. The stock they're invested in, they want that to reflect their value, which is very positive. On the other hand, we see that there is a trend of investment in passive products, in passive investment. What is passive? It's really buying the market, it's buying hundreds of stocks. You don't know what's in your portfolio, so there's no way you can have in a portfolio a stock or have a control of the stocks that reflect your value if you don't even know what's in this index.
So closet indexes have damaged the trust in managers. How can they earn back this trust?
We believe at Natixis that active management has a value, but we believe in real active management, in high active management, and that's what makes the difference. We believe with Natixis Global Asset Management, we believe in this organic food. We believe that we need to be at the highest active part of the investment universe. In order to build this trust, we bring, and we believe asset managers bring all the transparency, have a cost that match exactly the product. And it's also like everything, you need more education, explaining to people what's in your products. And here, when they know, and if someone wants to buy concentrated juice, he can buy concentrated juice, but he knows exactly what he's buying. And if he wants to buy something organic and healthy, he knows when he can buy something organic healthy.
So no one's getting misled.
That's how you destroy trust, is when you believe that the pulp is healthy when actually it's not healthy. So to answer your question, if you want to trust and to build this trust, we put the answer on the title of our survey. It's transparency and the quest for clarity. The more we're transparent, the more we're clear, and the more we can build again the trust between the investors and the asset managers.
Well, thank you, Babak, for speaking with us today in the studio. It's been a pleasure.
Thank you very much. It was a pleasure to be here with you.
And thank you at home for watching. Don't forget to like and subscribe to Dukascopy TV. I'm Kaz Cahill, and goodbye for now.